Let me get right to the point. We're all in this business to make money trading. Why else would you be sitting in front of a computer screen for hours on end, staring at charts? You might as well play a video game if you're not looking to make money trading. So in this regard, in the following, I'm going to show you a video that I prepared for our Amazing Trader subscribers to reinforce a pattern that repeats itself across all time frames, and one that if you catch it the right way with an identifiable stop, it'll signal a reversal in the market and hopefully then a profitable trade. So let's see what I mean in the following. We're all in this business to make money. That's the purpose of your trading. You're not doing it for the excitement. You're doing it to find a way that you could beat the odds and beat the market at its own game. Now, one of the ways to do it is by identifying a pattern that repeats itself many times across all time frames using the Amazing Trader. We call it a directional indicator. The directional indicator is formed by a line at the low of the day or the high of the day, followed by a higher Amazing Trader line, forming these two lines that often see a reversal and signal a reversal of direction. So let's ask the question, why does that happen? Well, the Forex market especially, but any market, no matter what you're trading, lives to run stops. I can't tell you why or when. I only know this is, to me, a fact. And when you see a big wick like this, it often indicates that the market ran stops. So that would be your first indication here. Now you get a second line here, confirmed by this opening candle here. What we mean by a confirmed line is at the opening of this candle, this line would have turned solid. When we turn solid, we say it's a confirmed line. And this is your directional indicator. You also had one technically on the upside, but that wouldn't have been confirmed till somewhere over here. And not one you want to chase, but this one was a correction of the overall trend. You had a small number of candles in between, so you're really right in the thick of the market trying to make a run at this downside. As I said, if it fails, market will likely lose interest on the downside. There's no more stops to run, especially since this was a correction of the overall trend, and it did occur late on a Friday. I have a 3-day weekend, but nevertheless, this directional indicator indicated this move to the downside was out of steam. And how would you trade it? You would have put your stop below this line. Market would automatically size your trade and set your take profit based on the factors that you entered into your template beforehand. That's all explained in our trading guide. And in this case, you say you had an 8-point stop. You got in at 109.25 at a 1.25 to 1 risk reward. You needed 10 pips on the upside to achieve your target. In that case, it's 109.35. That would have easily been hit. You've taken your profit. The directional indicator gave you an idea of where the risk was shifting. And end of story. Now, why do we choose a 15-minute chart? Well, the longer the time frame, the stronger the directional indicator is going to be. The largest number of directional indicator signals you'll get will be on a 5-minute chart. It also means a larger number of false starts. In a 5-minute chart, often if you're getting a move up or down, you'll have a pause. A directional indicator may form. So you got to be a little more selective on a 5-minute chart. 15-minute chart is already filtering out the noise. And when the candles are close together, that means this is all part of the same episode. Markets bottom, looking for to rally. makes a fresh run to the downside, fails, and boom, we're off to the races. And that's basically what a directional indicator is, just one indicator. But when it holds, it does signal a reversal in direction. It gives you an opportunity to trade using the Amazing Trader. To reach me, send an email to jay@theamazingtrader.com or visit our website at www.theamazingtrader.com.